Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks very much for listening. Each and every week, we bring you some mortgage news, some real estate news that might help you in your discovery or search for something to hang on to in a very, kind of a strange market, in that there's a little inventory, prices are going up, but because loans are so cheap, it's pretty easy to get a loan if you qualify. And so all of these things are moving pieces. So we try to bring you the answers to some of that. And on today's show will be no exception. We have some great guests who can bring you some information about loans, about the process itself, and of course about products. Now, there are probably 900 different lenders across the U.S. where your, situation will be looked at or reviewed if you apply to each and every one of these. But usually when you go to a mortgage broker or a mortgage banker or a bank, they're going to give you what they know or the programs by which they are able to offer you from their particular lender or their bank. If you're looking for a specific and particular type of loan, you need a specific and particular type of lender. That's why when you go out and shop in the marketplace, when you either Google it or you ask a friend or a neighbor or however it is that you're shopping for your mortgage in today's market, you're going to get a lot of different answers, because there are many solutions to what your problem is, not your problem, but your needs are. And if you're in a situation whereby your needs are exceeding the experience of the person you're dealing with, it's not because you're the problem, it's because they don't know enough to where that particular solution can be found. Like I say, there's 900, there may be 1,000 by now, different lenders out there with different kinds of programs to solve your problems. So finding the solution to your particular situation is always what we're trying to do here on the show. Now, we're on YouTube. We're on 8 different podcasts. Daryl, you have those podcasts for us?
I sure do. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Okay, excellent. And on YouTube, if you go there, our channel is Jeff Barton, the Mortgage Voice. Now, I've had many people call me and ask me about the information that they hear on the radio show, as well as on our LinkedIn and Facebook shows, which occur probably 3-4 times a week. I get a lot of feedback on the LinkedIn show, and mostly it's professional feedback from people who see it, like the information and how we deliver it. Again, it's dry information unless you need it, and then it becomes vital information. So we try to supply that. As I say, we're on 5 radio stations in 3 different states, and we're broadcast mostly during the weekend, especially on Friday and on Saturday and Sundays each week. And like I say, that's what we try to do, and that's the information that's important. Rates are great, as you all know. Real estate is tight, as you all know. And so that group of people, now there's several groups of people looking for housing right now, right? There is the millennial group, which is a huge group of people. And they're tired of not owning. They don't want to rent anymore. They're afraid of, the rental situation and that. We said last week, I think it was last week, 52% of these millennials are now living at home. And what that means is with their parents, because of the COVID situation and because of the uncertainty in their rentals or their jobs or however. However, there is a huge number of these people living at home that aren't working and want to get out and buy a house. So there's pressure on the market price-wise for real estate from this, which is the largest group ever to be in the market for housing. And coming of age, the millennials, yes, they are putting pressure on the housing market. I can't even speak, and so that, if you're out and you're shopping, that's why prices haven't fallen. Now, there's another large group, which is the baby boomer group, who are retired or retiring and are either selling or scaling down or, finished paying off their home. And so therefore the home becomes an asset by which their children or their relatives want to keep. So these two big groups are what is keeping housing the way it is. Now, why don't we see, and we know that there's roughly 3.5 million people in forbearance. Forbearance is when you stop paying your mortgage. And that ability to stop paying your mortgage, or the right to be able to stop paying your mortgage, ends in December 31st. So what becomes of those people who have mortgages, 3.5 million people? What happens to those homes at that time? Well, a lot of people are waiting around or don't understand why. The fact is that those people not paying their market, there's no foreclosures, but they're coming. Why isn't that affecting the price? And the reason is because we're not building enough housing. There aren't enough housing on the market, and those properties have yet to go into foreclosure. We're not really quite sure what's going to happen in December 31st, especially if we don't have COVID vaccine at that time. And for the foreseeable next quarter, probably won't see a grand total of people taking the virus vaccine. So we're going to need some more help for those people who need an extension of the forbearance program. This is what's keeping housing prices the way they are. Now, luckily, what we have is a marketplace whereby we've got 30-year fixed rates at close to 2.5%, 15-year at close to 2.5%, FHA at close to 2.5%. And by the way, FHA still a great product, right? Even if you have to come in with 3.5% down, great product at 2.5%. The jumbo product at 3.5%, let's say. These are all averages, of course. They're not nationally in every situation, but they're pretty close. This is, of course, for the 750 plus FICO score borrower who has income that they can prove. And by the way, as we've said many times on the show, when you go to prove income for your loan application, they're going to call or ask for a verification of employment 3 times at least during the process. No lender wants to get stuck with a loan that they just funded that you go into forbearance the next day. They don't want that at all. And as a matter of fact, it creates a huge problem. Even though Freddie and Fannie said, yes, we will buy them, it creates a problem. It creates a problem for the person who originated the loan, creates a problem for you as the borrower, it creates a problem for the lender who lent you the money, as well as Fannie and Freddie. So yeah, they're going to call 3-4 times. They're going to want written verification of employment. The marketplace itself is, as I said, it's a changing and evolving thing. And this week, that's kind of where we are. And how does this affect you if you're out there? If you're working right now and you've got a 750 FICO score, or you and your significant other are in the market, continue to look. There are always deals and things to be had. And people always say, well, is the real estate market going to come down? Are we going to get a better deal next week? The questions that are asked like that are people who are looking for the best deal. If you're looking in a neighborhood and you find a product that you like, and you like the neighborhood, you like its proximity to parks and schools and hospitals and transportation and all the things you need, and you can afford it, that's something you should be able to go and get. It doesn't matter necessarily whether you can get a property cheaply next week or next month. Nobody knows that, and nobody can predict that. Yes, there's going to be foreclosures in the marketplace. Yes, the prices may come down, or you may find an investor come in and buy them all. That's what happened the last time in 08 when we had the mortgage crisis in those days. Heck, we thought we would see prices really drop. Well, in some markets they did, right? In Las Vegas and certainly down in Florida and certainly certain parts of California. But for the most part, we didn't see the wholesale drop in prices that we wanted to see. Why? Because, investors come in and scoop up the product before they ever reach the market. And that is what could happen now, but we're not quite sure what's going to happen with COVID, with the extensions. So if you find something you like, look, the rates are great. They are just fantastic. If you can afford the mortgage payment today, it's a good bet to buy that property today. And you're not buying it from me, so it's no skin off my nose if you do or you don't. But that's advice I think that any realtor or any mortgage broker would tell you. If you can afford it today and you've got a good job, good FICO score, take the good Interest rates. That's what I'm trying to say. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Thanks for tuning in each and every week. You can hear us on a number of different podcasts out there, the Big Eight, they call them, and we're on all of them. Our KCAA affiliate makes sure that we're on them, and thanks to those people in KMET and our affiliates down in Albuquerque, as well as up in Lake Tahoe and Las Vegas, Nevada. A lot of great stations, great people at the stations. I did hear from my local affiliate at KMET today. They're just getting sucked in with the weather and the smoke and the fires. So my heart goes out to them, as well as anybody else who's dealing with these weather issues. It's not simple, especially on top of COVID and the civil unrest that's going on. And we have just an insane political environment. Yeah, it's not been easy. As I said to our next guest, it has been just a kind of a tough day for me. And of course, I'm talking about Charles Giscombe, who is the manager of our Malibu funding office in Las Vegas, Nevada, as well as he's an entrepreneur, he's a house flipper, he's, just a lot of different great things. We bring him on just to talk about the issues of the day, but certainly what's going on in the real estate and the mortgage world. Charles, how are you?
I'm great, Jeff. Thanks for having me today again. Thank you.
Thank you very much for coming on, and thanks very much for once again allowing us to enter your day. So give us an example of what's going on in your day. I know that you're dealing with trying to fix a house. First of all, fixing and flipping is an entire business. It has occupied many people for a decade or so. Some people are thinking maybe we're going to get some foreclosures out of what's happening when the forbearance period ends. What's your opinion on that?
You know what, Jeff? The trends say it. Even without the pandemic, just in the different things that have occurred, there is going to be a spike in foreclosures, I'm sure, forbearances. And, the thing about it is the economy, as much as it tries to correct itself, some people and a lot of people will just not be able to catch up, Jeff. Unfortunately, I wish everybody could catch up and everybody could be back on track, but that's just not the case. And so with that happening, there's going to be some people that are going to be behind on their mortgages, and they're either going to lose those houses to foreclosure, or they're going to have to do a deed in lieu of foreclosure, which is pretty much giving their house back to the bank. With that being said, there's going to be some properties available that have great equity positions. And unfortunately, in times of disaster, there's times of opportunity for other individuals that are ready and capable to transact.
Okay, so let's talk about that for a second. Let's say that I'm in a position whereby my job is gone, I'm in forbearance, but I still have my house. What are some of the options that I might be able to use in a situation like this? Obviously, it's an emotional side, but just take the emotion out of it. What practically can I do in this situation?
Well, there's a couple different routes that individuals go. The one that you don't want to do is not address your situation. Right. Because at that point, it becomes more stressful, more embarrassing, more time consuming, and just kind of leaves you upside down. What you do is you find out if there is an ability for you to extend, get more time from your lender to find out if there's an opportunity and option so that you can modify your loan or extend it out, or there is a way to move your payments to the back of your loan so that you can get caught up and get back up to speed and maintain and keep your home. If that's not an option for you and you're not provided that opportunity, then there's individuals like us, Jeff, that will come in, that will offer you an opportunity to sell your house to make some money so that you're not going to be in a situation where you're not getting anything and you're just losing your home and still going through the same process that we mentioned earlier. So there's many, so those are the situations that you could do, or you can talk to your bank and you can and see if they will take the house back. Now, it's still a negative on your credit, but it's not as bad as a foreclosure. And at the end of the day, they might be willing to give you cash for keys in order to give that house. It's called a short sale or a deed in lieu of foreclosure, where you give the house back to the bank. You know, at the end of the day, you can live to see another day without ruining your credit as much if you find one of those latter solutions or resolutions that we talked about, and that is finding someone who can come in and take that over from you, or giving back to the bank. Those are a couple of different options that we have.
Okay, so who would have thought a year ago, nobody would have thought that this was possible, that we would be talking again after 10 years or 11 years now, back to the possibility that you might lose your house. I mean, a year ago right now, the country was booming. And, you know, it just looked like no end in sight. We looked like we were going to get another 4 years of the current president. We looked like we were going to just see taxes continue to go down, unemployment continue to go down. And because of the pandemic, whether you agree with it or not, they closed everything so that we would have less people dying. And here we are right now talking about foreclosure. It's amazing to me.
You know, we are, Jeff, and you know, I don't like to get so religious or
right.
political on the phone or in
No.
these radio interviews. But
No.
the old saying goes, if you want to make God laugh, tell him what your plans are. And at the end of the day, that's a joke.
Mhm. That's funny, and that's
There
true.
you go. It's very true, because, you know, it's in the omnipotent's hand, and at the end of the day, you have to just, you know, these are things that happen. Corrections will always occur, and different things will happen. You know, the one thing about it is, as I always say, that you have to run to the problem and not away from it. And at
Right.
the end of the day, if you're in trouble, you go to it to try to get the resolution or find the resources that can help you get out of it. You know, one thing that happened before in the crash, when people were affected by the crash that happened in 2007 and 8, a lot of people's credit was affected. So what happened was there was a lot of renting that was occurring for those years, because individuals couldn't qualify for mortgages. So if you take the experiences from that time and now you utilize them now and say, hey, listen, before this happens again, I'm going to get myself together and try to address this, so I'm not caught in the same position, finding myself having to sit out for 3 and 4 years and having to rent, as opposed to being able to buy when things correct themselves. So just little things that you have to think of and keep in mind, and also just always know that there is an option, and you do have individuals that can come pick your house up from you, flip it, you can make some money for you. There's a lot of different options out there for you. So, you know, you don't be so discouraged. Just make sure that you do the research and be proactive and find your resolution.
Okay, that's great advice. And by the way, I agree with you 100%. You've got to walk towards the problem. You cannot walk away from it, because it just follows you until, you know, it's solved. One way or the other, the bank is going to solve your problem. So it's best to get in front, best to face it. Okay, so let's say you're not in as destitute a position, but you are looking for a non-traditional type loan. Have those loans come back into the market yet?
Absolutely. A lot of them had taken a break, because like we said before, when these kind of things happen, when these disastrous things happen, when crashes occur and different things happen, what happens is the market volatility is high. And so banks are not quite sure what the market's going to look like, what the rates are going to be like, what the home values are going to be like. So a lot of those programs that we would utilize that were non-traditional kind of took a break, sat it out to see what was going to happen and see if some stabilization was going to occur. Since that time, since the market has been coming back slowly, what has happened is these banks are coming back. And now I'm having a lot of the non-QM, which is non-qualified mortgage kind of programs, are coming back to the table and coming back in play. You know, we do know that there was obviously, you know, the volatility had occurred, but the lenders are more comfortable now understanding and seeing the trend, and so they feel comfortable with jumping back in. A lot of them are coming back in slowly and not offering all the programs that they offered with the highest LTVs, but many of them are coming back and at least giving fair LTVs and a little bit higher than they were when the pandemic first hit.
Hey, Charles, that's great advice. Somebody out there is listening, wants to get a hold of you because, you know, you're talking about things that are in need, will be in need very shortly for a lot of people. Could you shout out or tell people how to get in touch with you?
Absolutely. You can reach me at my email, charles@malibufunding.biz. That's charles@malibufunding.biz. Or you can call me at 702-328-5191. Again, that's charles@malibufunding.biz. Or call me, 702-328-5191. We're always here to help.
Chuck, thanks very much for once again coming on, giving us great advice, information about what is or probably will be for a lot of different people, and they're going to need solutions. Thanks very much.
Thanks for having me, Jeff. Always a pleasure to be here. Thank you so much.
Thank you. That's Charles Giscombe from Malibu Funding in Las Vegas, as well as some other states. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Thanks for tuning in each and every week. We are on a number of different podcasts, as well as 5 radio stations in 3 states. We're also on YouTube. We shoot this for video. Hundreds of them can be seen at my YouTube channel, Jeff Barton, the Mortgage Voice. We bring information about loans, about programs, about what's happening in the marketplace. We try to get into some solutions for what's happening, whether it's being equal housing access, whether it's equal loan access, or whether it's just somebody who is out there not sure what the process is. So we bring professionals to the show, whether it's an account executive from a particular lender, whether it's a real estate professional, whether it's brokers. There's all kinds of things. As everybody knows, there's 1 in 9 people in the U.S. who are in the mortgage and real estate world. So this is a huge industry that most people only have to deal with once. The professionals we bring on the show, yeah, that's what we do. We deal with it daily, hundreds of times a month. And now is no exception. First time on the show. And Carolyn, if I butcher your last name, please forgive me. It's Mosesi? Carolyn
Mosesi.
Mosesi. Okay, very good. Thank you very much. And she's from Quantic Bank. It's a new bank lender for Malibu Funding. I wanted to bring her on. And first of all, hi, Carolyn. How are you?
I'm doing great. Thank you for having me on the show.
And thanks for coming on. As I was saying, I wanted you on because you have some different approaches to certain types of borrowers that may not have been in the market that long. I mean, we used to have non-QM products all the time, and there were just dozens of them, and hundreds of different lenders had them. But you've come into the space a little bit differently, and could you just tell us a little bit about the bank that you work for, and then begin with some of the programs that you're offering, which may be of great help to a lot of the borrowers listening to the show?
Sure. I can tell you a little bit about our bank. We are a federally chartered savings bank. Therefore, we do take deposits. We're an online bank where you can actually deposit and have an account with us. On the other side of the bank, we also do a lot of lending, and specifically mortgage lending. The area we work at is across 50 states, and we are offering a specific type of a loan to borrowers who otherwise would not be able to qualify for a loan. Now, what does that mean? So we have a federally chartered, as a federally chartered bank, we are also a community development financial institution, which means that we focus on lending in the low-income, self-employed, immigrants, and entrepreneur type of borrowers. We focus on these borrowers because a lot of times they're not able to technically get a loan from a bank, your conventional lender, let's say, because of the way maybe they have their income coming in. Now, I'll explain more into the different types of incomes we take into account in a little bit. But I just want to put this fact out there. 27% of American workers will now have a difficulty qualifying for a loan due to our Dodd-Frank laws that came out in 2010. So technically, they're burdening some of these borrowers with qualifying for a loan.
Okay.
I'm going to talk about some of the ways that some borrowers would fall into this category where they can't get a loan. These would be some self-employed borrowers who might have a volatile income or non-recurring expenses, people working more than one job, people who earn commissions, tips, other hard-to-document sources of income, people who might be pulling resources from different members of the family and they want to invest into a property, but they really can't with the ways that they have saved up their money under like mom's name or the dad's name. So the whole family sometimes gathers together and puts money towards the down payment.
Right.
If you go to a conventional lender, you may not be able to qualify if you have your down payment in different sources. So we take those type of borrowers as well. Also, historically, our loans have been shown that by helping these type of borrowers, we can show that they actually can perform really well, only because they come in with a lot of down payment and they are credit worthy and they have worked and saved money to buy a house. So we're providing them a platform to get a loan.
Let me ask you a question, if I might, for just 1 second. One of the interesting things that you just pointed out was that with these types of borrowers, you're finding less, not more, you're finding less of them getting foreclosed on or not making payments. And that's goes against what conventional thinking would be. That's a good thing.
It's a great thing. We've been able to show historically over time that our borrowers, actually less than 2% of them default on these loans.
Right.
So just because they cannot prove their income, so to speak, via a W-2 or a pay stub, they actually do pour in resources from different jobs that they have, and they can qualify to pay for a mortgage.
Yeah, I think when people think about these types of borrowers, for some reason, there's always the thought that somehow they shouldn't get a loan, or this is what's ruining the country, which just the opposite is occurring. These people are strong borrowers who can't qualify in a traditional way with a Fannie or Freddie Mac loan. Does not make them bad borrowers. Actually, it makes them great borrowers because they're not only grateful, but they have the ability to be able to pay the mortgage again and again for, 360 payments. It's a great program that you guys offer it, that you're a federally chartered bank is, again, another safeguard on the system itself.
Absolutely.
So give us a little bit more explanation as to some of the qualifying features for this particular loan. I know that you had mentioned too also, was it bank statement loans you're also doing?
We have, I would say the main borrowers that we have can qualify via bank statements. However, we just can depend on them just giving us a profit and loss statement instead of providing 24 months of bank statements, which sometimes can be burdensome for some people who are busy and trying to run a business. Instead, they can just tell us exactly what income they have for 1 year. That would be for them to prepare a profit and loss statement for 12 months. And on the profit and loss statement, they can tell us how much income they have for the year, what expenses they have, and then what the bottom line is, what they take home from that. We take that number and we issue them a loan based on that income.
And that is a CPA created profit and loss, right? It's not just something I do on my QuickBooks.
No, well, actually, it could be self-prepared by the borrower, by the person who owns the business. And the CPA will validate for us how long they've been working in this business, how many years they've been filing taxes on that business, and etc. But the CPA does not necessarily have to prepare the P&L. The borrower can do it themselves.
I see. So that's even a better deal. Could you shout out your phone number or a way by people can get in touch with you? Because this is a great program. It's needed right now, and it's the type of thing whereby I think you're going to get some pretty excited people calling.
Absolutely. So I actually am a wholesale account executive, which means that I don't directly work with borrowers. However, you can reach out to our partnering brokers or loan officers who are approved with us, which Malibu Funding is one of those avenues. And in return, they will send us the loan, and I can be reached at any time for any questions. My phone number is 818-731-9863.
Karen, thank you very much for coming on. I really appreciate it. I want to have you back. The explanation, the way by which people can get a loan with you is right in the wheelhouse of a lot of borrowers in Southern California and many of the other states. As you know, we're in 10 states that we do lending in. So thank you very much for coming on the show, and I really appreciate it.
Thank you. Thank you for having me. Have a great day.
Thank you, and you too. That's Carolyn Mosesi, and this is from Quantic Bank. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks very much for listening. We are on the Big 8 podcast. Daryl, you want to run through those quickly for me, if you would?
Sure can. It's Apple Podcasts, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Okay, excellent. And on YouTube, if you go to YouTube, Jeff Barton, the Mortgage Voice, that's where we are. We shoot it for video. You can watch me talk to all the guests that come on the show, as well as the couple of different segments that I use to describe what's happening in the marketplace and some of my musings as to some of the solutions that are out there that are yet being utilized. The information that we give you is useful, and the people we bring on are extremely knowledgeable, veterans in the business that have been doing it for many years and be able to solve problems that maybe you hadn't thought of even to ask if it is a problem. One of the people that we go to all the time is Jennifer Conrad, who is a loan officer as well as processor, very knowledgeable person in both the correspondent as well as wholesale world. Jennifer, how are you?
I'm doing well, Jeff. Thank you so much for having me.
Thank you very much for coming on the show. I wanted to ask you quickly about the conditions of submitting loans and the turn times and the difficulties a lot of the lenders might be having because it's so busy.
Because of COVID.
Yeah, well, you can say COVID too. No, I understand. The busyness is about the rates and the COVID being slow because everyone's working from home. What's that like in for you as somebody who's doing this on a daily? What's it like for you?
It's pretty hectic right now. Rates are super low, so of course everyone is wanting to refinance, or people who have thought about purchasing, are now deciding to make a move to actually purchase. So we're flooded on that aspect, which is a great thing, to have so many, buyers and homeowners who are wanting to, to do a transaction. But on the flip side of that, I think, lenders are overwhelmed. So
right.
I'm looking right now anywhere from like 9 to 11 days on initial approval for loans, and that's conventional and FHA. And then conditions, some lenders are running, about 5 or 6 days. Maybe some others might do like 3. But it used to be a time where I could submit conditions, and I'm usually pretty good about making sure, I kind of hit everything that the underwriter's asking for, and even sort of anticipating things that they might ask for, so that I won't get, as we call recips, which is they come out with a second list of conditions that sometimes are just as long as the first list of conditions that they want us to satisfy. But now it seems like right now you're maybe submitting conditions 2 or 3 times before we're able to get our clear close and we're ready to go. And a lot of like verbal verifications of employment, verify again, even a file that I'm planning on funding tomorrow, here we are the day before, and I'm being asked to provide a pay stub, but not to the underwriter, but to our fulfillment company to make sure that the borrower is still working. So it feels like, there are lenders who are are trying to be obviously, more cautious with everything that's going on. But then, because of COVID, they want to make sure people are not laid off. But again, a lot of people are wanting to get in the market to be able to do different transactions, and lenders want that business, but it looks like they're having a hard time just trying to keep up with everything that we're being flooded with.
Yeah, and I think the STIPs, the way you're talking about, are used to be able to slow down things, because there's only so much you can do if you're an underwriter. And I don't know how many files they're doing per month, 20, 30 files a month. And let's say you have 3 or 4 of them, but you get hit with 200 loans that month. You've got to slow down the process, because there's no way you can keep up, even if you're working 8, 10, 12-hour days.
I feel like they might be slowing down, but I don't feel like it's because of that. I feel like it's just lenders are not able to get enough qualified people trained and ready to go. I mean, with some of the things that we're seeing, it's not like someone who's a novice would just be able to jump in and take over. You're sort of in a situation right now that you need to have had experience in this business in whatever capacity you're in, and that you're not new to this. You can't deal with someone being green, because there's not even time to try to train anyone. So I know, even speaking from that on my side, I can imagine what lenders are going through. That's why I have one file, and I'm trying to get a clear to close on it, and I've had 4 different underwriters in the file. The lender admitted there have been some, underwriters who just quit. Others, are trying to pick up and help, with other files. So, now, of course, we have more people touching the file, and there are more submissions that come out. So, I just think they're swamped, and it's hard to try to get people, who are fully qualified that can stand on their own without having someone else standing over them to train them. And then the fact that, everyone's working from home, then you're not in a situation where you can be trained. So you kind of need to have the knowledge kind of stepping in.
Hey, so if you are a borrower right now and you're looking because you got a 30-day close, you're in a contract that requires it, what are you asking or telling them or seeking to have them give you to make sure that this goes as quickly as possible? Other than what we normally get, are there other things you're telling them to give you right away so that you don't have to delay either with STIPs or original submission?
I think in the past, it might have been things like, I probably would wait until I have the full initial approval before ordering an appraisal, updating insurance, things like that. Now it's a situation where, like, out the gate, as soon as I know my intent to proceed is signed, and I'm ready to submit, I'm already updating insurance and ordering the appraisal so that I can try to have as much in that file when the underwriter initially sees it, so I'm not losing time. So just a lot of things that we normally in the past would have been a bit more cautious about waiting and updating. If I feel like I have, good findings, I know I basically have put good, correct information into my system to get good automated findings, and I'm going off of that. And just, trusting that everything is going to work out well since I've done my homework on it, and just try to put everything in to start out with.
What are some of the programs that you're seeing now more than what you used to see, or is there such a thing? I know that non-QM has been difficult to come by, and really everybody's in the Fannie Freddie mix, but is there a program that's over and over you're seeing being utilized with the rates so low?
Definitely the conventional loans. And, most people now, as far as the refinances, maybe they've had a 30-year fixed in the past. And I think a lot of people are really hung up on the fact, oh, my neighbor got a rate below 3%, so I want a rate below 3%.
Yeah.
So, there's a thing about being in the twos. And, with some borrowers, their score doesn't allow for it, maybe in a 30-year. But, I might be able to at least get decent pricing, and get them close to it, and maybe they have stronger income, and so I can get them into like a 15-year, and the pricing is there. So, I mean, that's the case. There's still people doing FHAs, and actually there are some non-QMs that are back.
Yeah.
So I am seeing some bank statements. Citadel Servicing is back.
Yeah, I saw that.
So I do see that they're a little bit tighter on the restrictions that they had before, because there used to be a time when I could close in an LLC. We have a lot of, foreign national buyers who are buying here, and they
Sure.
want to purchase their home and have it, in the LLC's name. That's how they want to close for tax purposes. And, there are less lenders allowing that. We still have Athens Capital, who is actually probably the first one that came back doing the non-QM loans, and even having, the stated income loan in regards to the debt service relief loan for investors, and they are allowing us to close in corporation names. So.
Hey, Jennifer, could you tell people how they might be able to reach you if they're looking for a loan officer, knowledgeable person in the business?
Absolutely. My cell number is 773-593-6831. Or, of course, you can call the office, and I'm sure, I'll get the information.
Jennifer, thank you very much for coming on the show, really illuminating, letting us know what's happening in the marketplace. Appreciate it.
Thank you so much for having me, Jeff.
Okay. Have a great day, too, by the way.
You too. I'll talk to you soon. Thanks. Bye.
I'm Jeff Barton, your voice in the mortgage industry. That was Jennifer Conrad from Malibu Funding, Inc., and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. And thanks very much. Each and every week, we get great feedback. We get a lot of feedback on our day show, which is on LinkedIn and on Facebook. Malibu Funding is our Facebook. If you go to there, look up Malibu Funding, you can find us. And on LinkedIn, it's Jeff Barton or Malibu Funding. And both of those things can get you to me. Our YouTube account is Jeff Barton, the Mortgage Voice. We have hundreds of videos on that. And by the way, we shoot this for video. A couple of our radio stations carry a video feed. But if you want to see who I am and get a feel for both what I'm talking about and what I look like and all that other stuff, you certainly can go to either KMET, KCAA, two of our Inland Empire radio stations. And I want to thank those people. You can go to YouTube, Jeff Barton, the Mortgage Voice. And we're down at, what's our Albuquerque affiliate again there, Daryl?
K-Mine Country.
Excellent.
AM and FM.
AM and FM. And you know what? I like Albuquerque. I'd like more feedback from the group down there, trying to get some more local people in that area, because every market's different, every market's unique, and we like to cater to those needs in those specific markets, like our Las Vegas market or our Lake Tahoe market. Burning like heck up there in Northern California. What do you hear from your radio station and everything else going on up there, Daryl?
Well, we're in the Eastern Sierra there on the Reno side, and it's smoky.
Yeah.
No flames.
Okay, that's good. No, it's yeah, it's been a rough week or so, and we're probably going to see some more Santa Ana winds in Southern California. Well, that's where the station is. That's where I am. But all over the West, it's really tough. I mean, we're getting hit with a quadruple whammy, and those people in, are the states where we have a license down in Florida and Georgia, and those people are getting whacked by the hurricane. The latest hurricane. What's the latest hurricane named?
They had three of them, a B, a C, and a D, I think, that were all coming in from
Right.
Louisiana, Alabama, Florida. That whole Gulf Coast was getting smashed.
Yeah, and I think, if you have a loan right now in any of these places, and the reason I bring it up is obviously weather-related conditions affect whether you can get a loan. And why does it do that? Because they want to make sure the house is there. So not only are you going to have to prove your income 3 or 4 times, as we said earlier in the show, but you're also going to have to prove that the house is there. And so usually what they end up doing is sending a appraisal or a secondary person from the appraisal company to go out and check on not only the house, but the neighborhood, the services, to make sure that when they're lending or funding on a loan in a particular area, that everything is still pretty good and still the same way it was when they initially decided to fund the loan. Not an easy situation for a lot of different people. And it seems to have come up a lot in the last 4 or 5 years. We've talked about weather-related incidences all across the U.S. On the show, because it really does affect, it affects your appraisal, it affects showings. I mean, COVID itself has affected the showings in real estate dramatically. I had a listing myself. It has sold. Thanks very much. I appreciate that. But in order to get people in the house, you have to make sure the house is clean. You have to provide sanitary, like hand sanitizer to the people. You have to leave masks out in case they don't have masks to enter the property, because people live in the property. You don't want to, you want to make sure that not only the seller is safe, but the buyer is safe. Both parties are nervous. You want to eliminate as many people during showing, so the listing agent can't be there. They'll have to stand outside at a distance. Yeah, all of these related instances, which have nothing to do with the property itself, but the conditions surrounding the property, are, and will continue to affect how business is completed. And it is stressful.
Jeff, I've got a little bit of a hurricane update for you. Sally is in the coast right now, 30 inches.
Please.
But they're tracking 7 disturbances and 4 named storms at the moment. But Sally is the one that is coming ashore now on the day that we're recording.
Okay, so the show is recorded on a Tuesday. So if you're listening to this show on a Thursday, Friday, Saturday, Sunday, just know it's a 3 days old. But these tropical depressions in the Gulf and off Florida are always threatening this time of year. And because of the nature of global warming, whether you believe it in or not, there's more water in these storms than there has ever been. And since Katrina, we have seen the surges that attack areas which do not have the ability to protect themselves, whether it's the bayou in Louisiana or the Panhandle or the Everglades in Florida. Yeah, and these are places that we, as a company, lend. So we're very, very, aware of the difficulties it is in those areas to get loans to buy real estate, or up in Northern California, Central California, up in Washington State, where we do loans as well. The smoke is terrible. Where I live, it's thick. And all of these things affect real estate prices and affect the ability to fund loans. And so that's what we've been talking about, what I've been talking about during this section. Okay, so the prices are up, as we said, this year over year. Last month was up about 9%. The pending sales have been up. The new listings are down. Now, we keep saying that there's limited inventory, which is another reason why pricing remains high. The active listings themselves down about 25-30% year over year. Now, that's in a market that already had low inventory. These are all rehashing of information that we've talked about on the show, but if you're just listening for the first time, this is something by which you can think about. Now, building housing and having the ability of people to buy and live anywhere they want has always been an issue for people who live in higher end communities. What do I mean by that? There is an attack, and during this political season seems to be more of an attack. Now, whether attack's the right word, I'm not sure, but the discussion about suburbs, the ability of people to live in the suburbs, and how do we make sure that everyone has equal access to wherever the heck they want to live. So the pitting of certain groups against other groups based on home values has always been at the center of what has divided communities in terms of people who want to live there and people who want to get in there. So what does this mean? Well, usually what happens in community situations, and we've talked about it before, whether it's the real estate agents on Long Island directing certain buyers to certain neighborhoods, or whether it's the Wisconsin buyers talking about how they couldn't get into a certain area because the real estate agents and the brokers wouldn't allow it. Real estate prices have always been based on supply and demand. However, if you live in a community and you want to see prices at a certain level and continue to rise, there's always this quote unquote fear of elements other than those that live there moving to the community and hurting the real estate values. Now, this all is at the heart of fair housing It's all at the heart of housing discrimination, whether it's economic discrimination, whether it's racial discrimination, ethnic discrimination, religious discrimination. This particular political season, it's really come to the forefront of what people seem to get upset about. The law is one thing, reality is something else. We, as a company, Malibu Funding, the company I work for, and as an industry, we try to be blinded by who you are, what you believe in, and the type of background you come from. Because the main thing for fair housing is that it's fair. If you want to live there, you live there. If you can afford it, you can afford it. In the lending industry, there's often the opportunity to be able to be fair, and taking advantage of being fair and honest and straightforward with most of our borrowers is really the point of what we do. It's not that way with every company. It's not that way with every loan officer or real estate agent, as is illustrated by the number of examples that we've briefly given here and over the time we've been talking. I mean, there are myriad examples that we experience with our particular company. If you run into a situation where you want to live where you want to live and you're thinking that there's some issues, you can always call us. You can always call, there's the Fair Housing Board at your local board of realtors. There's fair housing through HUD, and there's certainly lending guidelines that'll say, hey, look, if this person can afford the loan, you got to give it to them. I know it's stressful out there in what's happening. There are answers to homelessness. There are answers to low-income housing that only help neighborhoods by enhancing the quality of the people that you get there and by enhancing the ability of people to be able to live where they want. That's what we're about, and that's what I think fair housing is. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.